Welcome to the trading roller coaster. Trading is exciting. Markets move very fast. So many numbers, so many charts to see. It can be a real puzzle. Many people find it complex. It feels like a big game, a game with real money. So you definitely need tools. You need some smart tools. Tools to help you win. Or at least not lose big. Think of it like driving a car. You need a steering wheel. You need good brakes. These tools help you navigate. There is one special tool. It's like a secret weapon. Many traders often overlook it, or they might think it's too hard. It is called an OCO order. Sounds fancy, I know, right? But it is super helpful. Trust me on this one. Today we are diving deep into OCO orders. What are they exactly? How do they really work? Why should you even care? Get ready for this, folks. We are going to unlock this trading superpower, together. So, what is an OCO order? OCO actually means something. One cancels the other. Simple, right? Not so scary. It's like a package deal. You get two orders in one, but they are linked together. Very, very closely linked indeed. Here is where the magic happens. If one of your orders executes, then poof, like magic. The other one just vanishes. It gets canceled, automatically, instantly, right away. Yes, no need for you to rush. No need to panic click buttons. Think of it this way, okay? You have a trading copilot. This copilot watches your trade. It has two main instructions. If A happens, do this thing. If B happens, do that thing. But it will not do both. It will only do one. So, an OCO order isn't scary. It is actually a smart command. You tell your broker this: watch these two price levels, act on the first one hit, then forget the other one. It is all about efficiency, making your trading smarter. Let's imagine a cool stock. We can call it Future Gadgets Inc. ticker FGI. Sounds good. It's trading at $100 per share. You just bought 10 shares. You think it will go up, but you also want to be safe. Always aim to be safe. So, you then decide, you will use an OCO order. That is a very smart move. You want to protect your downside. And you want to lock in profits. You cannot watch the screen all day. Nobody can really do that. Not if you want a life. Your OCO has two parts. Part 1, a stop-loss order. You can set it at $95. If FGI stock drops to $95, sell. This will limit your loss. Part 2, a limit order. This is your take profit. Set it at $110. If FGI stock hits $110, sell. Now what happens next? If FGI stock price falls down, and it hits your $95 mark, your stop-loss order triggers. Your shares are quickly sold. Your $110 take profit order, it gets canceled. It's gone. Or if FGI rises up to $110, your take profit order triggers. Shares sold, profit made, your $95 stop loss, canceled. See? One cancels the other. Easy. Section 4. The awesome benefits of using OCO orders. Benefit number 1 is huge. It's all about risk management. This is super important. OCOs help protect your money. Your hard-earned cash, folks. By setting a clear stop loss, you decide how much risk before you even enter that trade. Benefit number 2 is great. Locking in your profits. Ka-ching! You also set a profit target. When the price hits your goal, the OCO sells for you. You do not miss the chance. Greed can make you hold too long. OCOs help fight that greed. Benefit number 3, automation. This means more peace of mind. Set it and almost forget it. No need to be totally glued to your computer screen all day long, every single day. The OCO order is your watcher, your tireless, always-on watcher. Benefit number 4 is key. Great for big market moves. Think about big news events, or when a stock breaks out. Prices can move very fast. An OCO helps you react quickly, even if you are not there. It is your quick draw helper. Section 5. How to set up your OCO orders step by step. First things first, always. Log into your brokerage account, your main trading platform. Most of the good brokers offer OCOs. Look for the order entry screen. This is where you tell the system. Tell it exactly what to do. Find that important spot first. Next up, pick your stock. Or it could be crypto. Or whatever you like to trade. Then, look for the order types. You will see market limit. Keep looking for OCO. Sometimes it's under advanced orders. Or maybe conditional orders. Click it. Now, you enter the details. For an OCO, you usually set 2 orders. One is often a stop loss. Enter its specific price. The other is often a limit order. This is for taking your profits. Enter its specific price too. Double check those numbers always. Review everything very carefully. Are all the prices correct? Is it a buy or a sell? Once you are absolutely sure, Hit that confirm button, submit your OCO order now. Boom, your trading co-pilot, it is now active. Awesome, platforms differ, so check guides. Section 6 OCOs, things to know and final wisdom. Okay, so OCOs are great, but they are not totally perfect. One thing to watch, slippage. In super fast moving markets, your stop loss might trigger. But the price could slip down, a bit lower than you wanted, it happens. So be aware. Another important point here, not all brokers will offer OCOs, not every single one does, especially some of the free ones, or they might charge a small fee. So always check with your broker, before you plan your strategy. It is always good to know. Be careful with your price levels. Do not set them too tight, if your stop is way too close. A normal price wiggle or bounce, it might kick you out, prematurely from your trade. Give your trade some room to breathe and work. So, are OCO orders worth it? Yes, absolutely they are. They are a real game changer for managing your trading risk, for automating your trades, for sleeping much better at night. Master OCO orders, my friends, they are a very key tool for any serious trader out there.